Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap, or 10, 15, 20 minutes, somewhere in there. 15 minutes, I think sounds actually like a good time. Review of what we covered in the Daily Brief today, and also maybe some side thoughts from Brian while I have your attention. So let's just make sure YouTube is working. Sounds actually like a good... Yep, it is. That's good. So let's get to work. As we said, we're changing data vendors right now, so dashboard's a little empty, but great commentary. As soon as you see this thing filled out and signaling systems and all that, you'll know that TRI took full advantage of its developer cycle and we're ready to kick butt. So we don't really need to spend a heck of a lot of time over here, but what did we talk about in the Daily Brief today? Actually, it was a pretty lengthy one, and it was kind of weird. I had even warned everybody. We had a couple guest speakers on yesterday. Our CTO, Sjord, gave a site update and a little bit of conversation about what I just was talking about there with the dashboard development and all that. And then we had a really, really great presentation by one of our UK OGs, Jamie, talking about fundamental analysis. And interestingly enough, what we're seeing in the market today is a direct sort of tie-in with what he was talking about yesterday, in that we were watching the econs very closely this morning. And we're watching, thanks to Jamie's excellent guidance, we were watching the non-manufacturing numbers coming out of the States. And really, long and short of our conversation in the Daily Brief today was that the baby boomers are in retirement. They've got all the money. So does it really make sense that we're going to have a whole bunch of manufacturing starting up? Not really. Millennials might get there one day, but they're not there yet. So where is this economy going? And I challenge all our level 1 students to really think about sort of strategic vision. What is our society going to look like 10, 15 years from now? And I think, we continually are seeing this kind of anecdotal information that the services sector, or the non-manufacturing part of the economy, is actually still expanding. And of course, red numbers on this trading economics, those are the sort of the headlines that all the sort of talking heads in the media are going to focus in on. So we have balance of trade. Interestingly enough, the trade deficit actually came in a little bit better than expected. And as we said just a second ago, non-manufacturing PMI actually comes in at 54, and also it was on basically an uptick, better than expectations. So in a weird sort of way, we always start off our conversation, what's the US dollar index doing? And I'm getting the direct feeling that, we had the Fed rate cut. And sort of following that, everybody's kind of like, oh, the sky's falling, the economy's collapsing, the manufacturing data looks horrible, right? And then we actually get econs from the service side of the sector that are showing economy's still relatively okay here in North America. If we understand the makeup of the economy, this data actually is encouraging. We should see the services sector expand and do better going forward over at least the next few years, which I'm hearing got lots of sort of Fed commentators this morning talking about maybe, we're done lowering interest rates. The data now is confirming the economy's not falling off a cliff. Maybe we can cool it on the cutting interest rate kind of talk. And I also noticed, too, we had a long conversation in the Daily Brief about this. We're actually starting to get little signs of inflation is actually coming back into the system, which, in the short term, that's a good sign that the economy is doing okay. Also, too, though, I'll be watching this very, very closely. Do these bonds actually go and carve out very, very well-defined M tops? Of course, Brian's been rather bearish of bonds lately anyway. And you can see yields now, we're not even remotely in that sort of yield inversion conversation anymore. And also, too, you can see the very wide, very well-defined W's that are trying to come in on yields. So that's the exact opposite as price. So, ironically enough, what actually might slow this stock market down, if and when it does slow down, is people actually might actually start talking about, oh my God, look how high interest rates are. And we have to start revaluing these companies based in the light of new interest rate environment. But for the short term, long and short of it here is this is, in my opinion, like risk on, risk off kind of conversation. Data coming out of the States is actually okay now. We look at stocks. We talked about 127s, 308 area here on the SPYs, probably, 310, 127 of this range. Stiff resistance. I mean, I suppose we could break down at any given point in time, but I think, we kind of talked about with the stock market, as long as this gap remains unaddressed, then the market's happy. We're probably at some point got to come down and fill in this gap, but it's not today. And we were even reviewing on the daily brief, and I think I've showed you guys this. I even said maybe yesterday I was going to review this. This is the NASDAQ 100 QQQs, the ETF. Still thinking, 1.618s, parking garages, AB equals CDs. Actually, believe it or not, I could still see a little bit further higher here in the stock market over the short term. I think I showed you a bunch of the pharma names, but actually I don't want to get derailed here. Let's keep moving forward. Point of the matter here is U.S. dollar's looking a lot firmer. We actually went through the daily brief and picked apart the euro and the British pound. I think they're setting up the most beautiful short trades developing. And now the econs coming out of the States are actually supporting the idea that maybe the Fed's done lowering interest rates. Lowering interest rates. I've been thinking that this should be AB equals CDE and we work our way down lower. But we're getting a mass exodus out of, all the risk off proxies. So not only do we have that top in European currencies, but we also have some really, really nasty action coming out of the Japanese yen right now. Where the hell's that damn chart? It's around here somewhere. Nope. Okay, now I'm just crazy. Where the hell did it go? Okay. Well, usually I have it on the screen here. Sorry, everyone. There we are. What kind of day is it here today? Looks to me like it's still very risk-on-y. Hats off to my co-show host, the director, the driver of the bus, the Duke of Albuquerque, went and bought this oil long trade. Had excellent patience and discipline through this pullback, and he even just said, no, I'm not doing anything. I'm in the setup. There's nothing to do. And there it goes, surging to new highs. There's stocks, just not necessarily really face-ripping higher here today, but still looking uppy. And our good old Bitcoin, working its way back up a bit higher. Had a big pop yesterday. I suppose we'll talk about this in a few minutes. Kind of sort of maybe back into the range here today. But, if this risk-on thesis is correct, and it's just a thesis, then still think Bitcoin can enjoy a bit of up. And then, of course, the risk-off. Oh, boy. What do you say? I could sit here and rub it in the gold bugs' faces about how I was really worried about something like this happening. It is interesting to see when we look at all those proxies that the bonds actually did break these most recent lows. So remember, I sort of said recently, the reason why I got into this bond short was I'm actually looking for the bond market to trade back down to this 130 area. So I don't have any business touching this until either we trade at that 130 area or, my option is trading, $5. It is moving up nicely, but it's not at $5 yet. So there's not really much for me to do here. Yen actually did, remember I said earlier, huge rush into the US dollar index here. Econs out of the States pretty good. And, the irony of it all is if you actually look at the econs out of Europe, and that's what, like I said, we actually did a long talk about the euro and the British pound and stuff. it's not like they're going gangbusters. So the fact that the U.S. econs are coming out relatively good, I think, it's sort of okay. Well, it's not end of the world disaster, so we don't need to run into the end. And then the poor old gold. Oh boy. The problem with the gold market here is, we should have been looking at this all along. Like, oh boy, this has got some work to do. Um, there's Julian's level again. That 310 up to 320 area. It stopped this SOB in its tracks again. It is interesting. The other day we sort of talked about this funny little gap that never really was filled in here. So we're definitely going to get that gap filled in here, no doubt about it. It's a little bit dangerous for the gold bugs, the fact that the volume is accelerating here. And this is a big red day and we are down hard. So, it sucks. I never did get my polite short entry window here, but, you can only do what the market gives you. And if anything, I think we've drawn these charts out for you before. You got to keep zooming out. Where the hell's the damn low? Jesus Christ, how far do we have to go back? So really, if I'm going to look at the gold chart, the very first thing I'm going to say, well, okay, you want to know what your uptrend is? Well, just connect the dots. Yeah, it is a bullish trending market. But, just looking at this very simple one, and of course we could probably do, the textbook definition of these trend lines would be there to there. I'm just going to eyeball this because we got still lots to talk about here. So, really anywhere down in this area is actually where I want to be a buyer, not up here. What I'm worried about, do you see how this is like choppy, 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 and then, oh, shit. This is looking kind of similar. Choppy, 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 choppy. Do we have to dump back into these levels, which would be the same as this? This was the famous Druckenmiller gold short. We even made reference to that in the daily brief today. Maybe we get some sort of counter trend rally back up into reload zones. I can hit it again. But, this is the same conversation. If I really want to be a buyer of gold, believe it or not, actually, I think probably the very first place we can have that conversation is down in this area. So that's 1374. Yeah, we're at 1484. So, a good $100 lower. And if I look at, I of course like to watch the biggest gold stock around and then the gold and silver stock index. Biggest gold company around broke to new lows here this morning. So again, there's just no reason for us to be bullish. We are coming up against some trendline support and we're against all these key lows. You see this back and forth. So could we get some back and forthy? Sure. But it looks to me like this triangle's in, and so, we're working our way down. We'd have to wait for a really nice W to come in. If we look at the gold and silver stocks, I thought this was kind of interesting. If we draw an apex of these two, this descending wedge kind of idea, I noticed that it comes to an apex right around that beginning of December. Now, why do I mention that? I like to follow the cycle kind of thesis, and I actually think for things like the stock market, we're into a risk-on type of environment. And believe it or not, actually for the next, better part of a month, I'm actually going to be looking for equity to outperform. Now, I said this yesterday. I've said this a few times. Have things got maybe a little too far, too fast here? I think so. Could we get some pullback here? Sure. Totally realistic. But ultimately, ironically enough, and, good reference, first, second week of December, Alan Greenspan made a famous speech, Irrational Exuberance. So go Google that if you want some historical reference. But the stock market usually likes to rally into the first week of December. So I am thinking uppy, but I will fully acknowledge this is getting extremely risky in here now. All right, so little talk about risk on. As I said, stock market really tough up here. There's some areas of the market which we'll take a look at that look really great, but they're generally speaking, stock market. I couldn't go and buy this. That's definitely for sure. Another risk-on asset, like we said, Kavarkanator went and grabbed along here. He's loving this oil rally here. So way to go, Kavarkanator. Nice trade. Risk off. I'm short the bonds from up top, and of course I'm not going to take profits on this until way down a little bit further, about 6 or 7 points lower. And the gold market, well, you know my thoughts on gold. A couple names that really have perked my interest lately in the stock market. This is an energy play, and what I really like about this GPOR is weekly W's coming in here. So, just as you've always heard me talk about, crypto, weekly W's, same logic. So I actually went and just grabbed some because I love weekly W's. So I actually just went and grabbed a little chunk of this breakout here yesterday. And I've also got another bid working down here against these lows. So if I get filled on both orders, my average will be somewhere in here, right around that gap. But look how far this thing has fallen. I mean, this is just going back to middle of 2018. And, 50% retracements. Could we see a move back to $7? I mean, sure. You can see I have an alert already set there. So I'm very interested in names like this. Buy when it snows, sell when it goes, that kind of thinking. And then, and these guys happen to be in the energy business. Gee whiz. I think Brian likes energy right now. And, here's another one. This one happens to be coming right down into a reload zone. It hasn't put in the weekly W yet, but I'm hearing lots of positives about this company and pretty good fundamental structure. So I actually went and pulled the trigger on this bad boy here recently. But do your own due diligence. It's not financial advice. This is what I'm doing with my money. You do with your money as you please. I went and did a little bit of nibbling off 78.6s there. So we'll see how it goes. So there are names in the stock market that do interest me here. And actually, we have a TRI-SOF meeting tonight. And my hunch is I'll probably have a whole new basket of ideas to look at following that. So, just to wind up the call, talking a little bit about crypto. There's nothing really too new to report here. In the daily brief, we took a look at some of the names that are trying to move up. We had a long conversation about a tweet that I put out with regard to bullish divergences. If you ever see bullish divergences in on-balance volume, oh my God, that's such a hugely bullish sign. And if you want like an excellent illustration of that, and actually, I had some TRI site alumni members putting these tweets out, trying to plead with the public to pay attention, but of course the public never does. And one gentleman, Jonathan in particular, lives over in Germany now. He was pointing out this beautiful, actually I guess that was the MACD divergence. Really good example of divergence there. I don't know whether we got an OBV divergence. Doesn't look like it. So actually, no, this is a good example of price divergence. And actually, Jonathan, when he took the education program, he was like, man, there's really nothing else to study. If I see bullish divergences in OBV, I gotta fucking go buy that damn thing. So we had some fun conversations and illustrations of what does divergence look like in your asset. I just happen to have lumens versus US dollar here from Trex, and hopefully you can see lower lows in price, higher lows in OBV, and look at this beautiful W in OBV that's coming in here right now. And you can see the volume, big chunky green bars. Somebody's coming in on the buy side. And then, this is where I really need everybody to get to, right? We're supposed to be rational investors. Why? Why is this happening? What's the fundamental reason? I would make the argument, if a company comes out and says they're going to burn, what is it, Kevin? Is it half of the supply that's outstanding on this thing? I always like to ask Kevin because he knows this stuff way better than I do. Yep, he says half. I mean, something like, what is it, 50 million, 50 billion, 50 trillion? I don't know how many coins it is. But they're basically reducing the supply of this asset in the marketplace. And, whenever you reduce supply and even demand stays exactly the same, what's going to happen to price? I mean, this is sort of where the rubber meets the road, fundamentals. So, you look at a name like this, and, I would argue, are you walking into a trap? No. Actually, the irony of it all is that, and God, I hate to sound like a broken record, reload zones, anywhere below here, actually, I don't really have a problem with people accumulating this whatsoever. And now we're starting to get some really interesting bullish divergence. I mean, I'm not really touting this name in particular, but it's just such a good anecdote that I believe that we're far, far closer to the bottom of this cycle. Of course, the public has been destroyed. The public interest in crypto is gone. All they have is negative connotations in their mind about shit coins. So would it make sense to start seeing this kind of interesting internal message that, hey, you know what? These prices are actually a heck of a lot stronger than what price itself is leading you to believe. And I think that's the kind of environment we're in right now. So get ready, you crypto kids. You've gone through 2 years of just fucking crap. It's about bloody time we get back into rah-rah crypto. So I'm feeling actually pretty excited about this space. As I've told you guys, I mean, I do have a long position working off of these lows on Bitcoin, looking for ABC extensions. We'll see how that trade goes. There's no guarantees in any of this kind of stuff. And as I said just a moment ago, I'm seeing a heck of a lot of really interesting internal messages from the crypto space that I think we're much, much closer to a bottom than the top. So, all right, I think I'm going to leave the rant at that. No idea how long I was. Heard from a lot of people today that they really, really liked today's daily brief. We covered everything under the sun. And I feel that they got really good value for their membership. So if you want to take the next step, if you like my presentations, if you want to get this like times 10x, that's what the daily briefs are all about. And of course, our awesome lounge, PMA for the win. And we all work together. In fact, actually, there's a couple really cool ideas that we reviewed that were posted by site members. For example, Daniel Riviera, just a killer trader, is following this bot setup on Litecoin right now. But we don't need to get into that here. So, okay, everybody, have yourselves a great day. Thank you so much for your participation and interest in what we have to offer. Try and play from a position of strength. Of course, if you need help just getting started, pointing in a good direction, even understanding half of the stuff that I say, that's the whole point of the school program. And I think if you put yourself through the school program, you really apply the concepts, it'll change your life. So have yourselves a great day, everybody. All the best. Thank you so much, TRI team, for your support, helping me put all this stuff together on a daily basis. And the only thing I think left for Brian to say at this point is a big bye for now. Toodaloo.